Great to be chatting with you, Jim Cowles. Jim, the reason I'm excited, and there's a whole ton of them, but former CEO of Citi for Europe, Middle East, and Africa, 23,000 employees in 55 countries. You know about working in a big bank system. You know what the business is about. And now you're with a nimble, fast-moving, highly agile startup called RTGS Global that is creating a global clearing system that is really, in my mind, bringing some tremendous opportunity to the international trade business in terms of freeing up financial friction or reducing financial friction in international trade. And we had a great interview with Nick Ogden, your colleague. I think you're executive director there now.
Yes.
Great interview with Nick Ogden a few weeks ago, understanding that. And so really what I'd love to chat with you about is just from the perspective of from being in a really big global bank and understanding where the perspective of financial technology and the opportunity related with what Canada is now calling consumer-directed finance or open banking, the move to enable financial technology companies to dramatically improve banking. So what we're wanting to do is just get the perspective from inside the banking system. I mean, you've seen it. You know, just to give you one more context piece, the Canadian Bankers Association just said the reason why Canadian banks are the only ones that should be addressing the COVID response on behalf of Canada to small businesses because they spend $100 billion on technology over the last 10 years, as if spending money is actually making advancements. We know in government that doesn't necessarily happen, and in big business that doesn't necessarily happen.
Well, that's very true. Unfortunately, that is true.
So anyway, I think your perspective on some of this would be really useful, and I just wonder, you know, just how are you looking at this, and how have you found your way to being in a fintech, and that path from being a senior global executive in one of the biggest banks in the world to where you are now, and your realization about the opportunity here.
Right. Yeah. Well, first of all, Colin, thank you for having me. It's a pleasure to be here. You know, it's interesting in terms of looking at the journey that I went through at Citi, and I think that many of the largest global banks are going through in terms of how do they view technology and how do they view their interaction with fintech companies, because that has changed. And let me just back up for a second and say, one of the most dramatic changes in terms of banking is what has happened after the financial crisis. Because as a result of the financial crisis, obviously regulators around the world decided that they needed to impose more regulations on banks. Fair enough. And one of the things that Basel III did, which is a global committee and has an impact on all banks, is it increased the capital requirements for banks. And as it increased that capital requirement for banks, a bank is going to look at that and say, well, I have to have more capital, and my shareholders demand that I have a certain return on that capital. So instead of having $1 of capital and having to get a 10% return on that, so 10 cents, now I need to have $5 of capital. And if I still am going to get that 10% return, that means 50 cents. So, gee, how am I going to do that as a bank? Well, as a bank, you're going to look at it and you're going to say, I need to look at my strategy, and I need to revamp that from what it was. And so what banks need to do, number one, is first of all look and say, of all the businesses I'm operating in, I need to really focus on those businesses that I'm the best at. I need to focus on those businesses where I'm really providing value to my customer, to my client, and where I'm really competitive. And the reason for that is those businesses or products that you're most competitive in are going to give you the best returns. And so number one, banks have gone through, and you've seen it in terms of the way that they've looked at their operations, and they've scaled back in many cases. They're focused on those businesses that they're the best at. The second thing they need to do is they also need to reduce expenses, because that's another way to enhance those returns. So we all know that one of the best ways to reduce expenses is to invest in technology and to make it so that you're using that technology to be better at what you do. And so if you're a bank, you look and say, okay, so how am I going to do that from a technology point of view? And as you said, you know, the $100 billion or whatever it was in terms of investment in technology, having been in various banks and seen this, unfortunately, when you look at a technology budget for a bank, the first thing that they have to spend that money on is make sure that they're maintaining their legacy systems. So there's nothing innovative about that. That's just keeping the lights on and business as usual. The second thing they have to do is they have to invest money in meeting the new regulatory requirements that they have around the world. By the time you take those two components and add them together, for most banks, that's going to probably equal about 90% of their overall technology budget.
And that's just to tread water. That's just to stay in place.
That's to stay in place and stay compliant. So now I've got a whole 10 cents. It's kind of like looking at a government budget. What is actually there to do something new? And so they have 10 cents, let's say, to go out and really do something innovative and to change things. So you look at that and say, well, how do I get the most leverage out of that 10 cents? I can either use that to create my own solutions, or I can use that to work with and lever that by working with other companies out there, fintech companies, as well as established companies like a Google or Microsoft or what have you. And I can lever that in terms of working with them. So then, again, strategically as a bank, you have to look at it and say, as I look at the technology I'm going to develop, am I really going to develop something that is so unique that that technology gives me the competitive advantage? Or do I want to use it to bring in new technology so I'm operating more efficiently, so I'm giving a better solution to my client? And I'm really focused on that client relationship. That's what I'm doing, as opposed to developing the best technology that anybody in the world is going to have. Assuming you're going to develop the best technology that any other bank or any fintech can, that's a tall ask. So that's where I look at it and say where banks should be focused on is using that incremental dollar in technology to work with technology companies and work with other banks in a consortium of how do you develop and onboard the best technology that's out there, so that you reduce your expenses, so you have a better product offering, so that you can give that solution to your client.
And I saw just recently a story from the U.S. on that I think provided a great example of what the potential is there, and that was Cross River Bank in New Jersey, small community, one single branch community bank, did as many loans under the PPP program from the Small Business Administration as Bank of America, Citi, Wells Fargo, J.P. Morgan, any of the biggest, but their loan size was $38,000 per loan to small business versus a $300,000 average loan size in the big banks. I think that those data show exactly what you've described, that the major banks have had to stick with their larger customers because it's too expensive to manage that smaller size. And the fintechs have enabled a small community bank to increase its reach and cost efficiently and highly effectively deal with a lot of smaller entities that during a COVID time of crisis need that help as badly as anybody, if not more so.
Yeah, and that's one of the things, by reducing your cost of execution for a bank, then you can go ahead and look at it and say, well, now I have new client sets that I may be able to appeal to, and that may be attractive to me. But the other thing you mentioned is, one of the things, and I'm involved, as you say, with RTGS Global and also some other fintech companies. And what we're finding in every instance, because of COVID, because of what it means in terms of the way that people have to work now, and because of the demands on banks in terms of serving their clients, et cetera, I think that the digitization process that we thought was going to take 5 years is happening in 6 months. It's just, people need to do things remotely. They need to do things efficiently. And you need to do things in more volume in terms of what's happening. And therefore, that demand is coming through. And so again, from a bank's point of view, if you go back 7, 8 years ago, I think, a lot of the dialogue was, gee, are fintech companies going to disrupt and displace banks? Are the fintechs an existential risk for banks? And I would largely say no, that they're not. I would say that there are some fintechs that are certainly challenging the profit model of a bank in certain product areas. There's no question about that.
But there'll be more of that, I would think, as we go forward.
There'll be more of that. But this is where a bank's got to look at it and say, again, what are my strengths and what am I going to utilize? My strength is I got a big client base, and I've got people, but it's that client base that really matters, and I have capital. So what I want to do is I want to invest in the technology as well. And so instead of looking at fintechs as an existential threat, I think most banks now and most fintech companies look at it and say, actually, the way to do this is to collaborate.
Yeah, absolutely.
The way to do this is, gee, I got a problem. If I'm a bank, I got an issue with cross-border payments. So I'm going to collaborate now with a fintech company. I have an issue in terms of anti-money laundering technology. I'm going to collaborate with a fintech company who can provide that. And so the examples go on and on. So the real opportunity is to say, let's encourage the banks to work with the fintech companies so that the fintech companies, grow, which is a great source of continued innovation. But let's also have the banks work with them, because the banks have a need, as I said before, to become more efficient, to lower their expenses, and also to improve that client experience. Because that's the existential risk to a bank, is that they're not delivering for their clients.
And they put that client base at risk when the client can go next door and receive far greater value at a lower cost. And
Exactly.
that's the big risk. It's not the fintechs. It's not keeping up with the fintechs. It's a risk. It's not working with fintechs.
And it's interesting because also going back 6-7 years ago, one of the things that people talked a lot about was, oh gee, what about all the regulatory hurdles that protected banks? And there's no question, there's a lot of regulation on banks. There's more regulation today than there was 6 or 7 years ago. But at the same time, no bank can look at it and say, I'm going to be protected by regulations from competition from outside the banking industry. I think that is a short-sighted, naive view, because that technology is going to happen. And again, it may not threaten the existential position of a bank, but that technology is going to look at it and say, where are the most profitable parts of a bank's operation? And let me go ahead and try to disrupt that aspect of it. So if I'm a fintech company, I can disrupt certain aspects of a bank's operations without being a bank, without being subject to those same banking regulations. And so I can offer that to my clients, and therefore, encroach on the profitability of a bank. So if you're a bank, you better look at that and say, yeah, that disruption is coming to me one way or the other. I can't count on the walls of regulation to protect my business model.
Yeah, and you and I have talked about that Harvard Business Review article about, do we want a wider and deeper moat? Is that a way to sustain and assist your business to grow? Or do you build bigger ecosystems, these digital ecosystems that allow you to reach to customers and deliver value all over the world through a much lower cost base? And for me, the answer is obvious, and it worries me from a competitiveness standpoint in Canada that we're not embracing this. So the next thing I want to ask you about is, the United States is taking a model which is really just sort of allowing the industry to go their own way. Britain has had very much a legislated approach, and certainly from my standpoint, I think it's worrisome if there's a vacuum of government not having an involvement in the process of opening the financial market up to greater competition, because you're automatically handing a lot more power over to the incumbents. And if incumbents were to design the system, it will not embrace the greatest levels of innovation at the greatest speed. It is maybe an assumption.
I think that's a fair assumption.
So it's, that's certainly in Canada one of the I'm really concerned that Finance Canada is leaving a vacuum there right now. At the approach, and I sure hope they don't let it get filled just by incumbents. But I want to just talk about the banks for a second and say, how can I help? How can I work in a position as a legislator in Canada? How can I help them over this hurdle? Because, I do believe the banks are reluctantly coming to the table. They're getting there. They're realizing there's something they've got to do. But the the transition is slow and painful, and you know, it's full of reluctance and not embracing the challenge and the opportunity by any means. What caused you to see this change, and from your standpoint, and what advice or help can you provide to Canadian banking executives to start to see the opportunity that the two of us are talking about?
Right. Well, I think that again, as banks go through what they've gone through in the last, it's now 12 years, many of them are now coming around to this realization in terms of how they have to change and how they need to improve their returns and become more efficient. At the same time, I will tell you that you know, you're right. Incumbents don't like to see change. But typically when you allow change, you end up with a much better system going forward. I mean, one example I'll use is go back to in the US. US stocks in the US used to trade on eighths. So the increment of, you know, you buy something at 12 and a quarter, 12 and 3/8, 12 and a half. And then I remember there was a time when all of a sudden it went to pennies.
Yeah.
And so now instead of, you know, the difference between, you know, 12 and a half cents, it was a penny.
Yeah.
And people thought, oh my God, this is going to be the end of commissions for banks on equities, because instead of charging an eighth, now I charge a penny. Well, what they saw was an explosion in terms of volume.
Volume of trade.
Exactly. And so the volume went up dramatically. And those banks that were positioned with the best technology to be able to handle that volume ended up doing far, far better economically than anybody did with, you know, in the old system of an eighth. Yeah. And so what you ended up with was a cheaper transaction for the consumer. You ended up with greater volume, which increased the liquidity in the marketplace, which means that it was much more effective. Yep. And you ended up with banks who had the technology in a much stronger position in terms of going forward. So I look at it and say, you know, let's not fight technology. Technology is here. And if you're a country in particular, if you're fighting the technology and the technology is embraced by countries around the world, then all that means is a country, your banking industry is going to end up being less efficient and less competitive. Over
and
time.
more at risk, because their highest margin product lines are going to be under attack by more groups.
That's an excellent point, because that means that the sustainability of your banking system is undermined because you're trying to protect it with that moat. And we all know, I mean, you know, just think about it. I mean, a castle protected by a moat, that doesn't work anymore today.
Yeah.
That doesn't work given the technology.
I got a drone.
Yeah, exactly. And so one of the things I think that regulators can really do well, and I've seen this happen in Europe, is to get the banks together. And when they're facing a certain situation, or they're facing new regulation, or they're facing something, is to say, you know, we want to provide the forum for the banks to come together. And so this way, the bank's looking and say, okay, well, this is good. I'm actually meeting with the regulator and we're trying to come up with solutions together. So no one's going to ding me for being anti-competitive or colluding or whatever it may be. You know, the regulator's bringing us together and saying, okay, whether it's anti-money laundering or know your client, or how to increase financial inclusion, you know, in society, which is it's obviously needed. Let's get the banks together and talk about what the solutions are, and let's see if we can't move this together as an industry in terms of how do we approach some of these things. And we, the regulator, want a safer and sounder and more inclusive banking industry. So let us work with you in terms of how do we do that, and also at the same time bring in the fintech guys, you know, and provide them, as we call it, a sandbox that they can start to operate in, where we can see what works. You can explore those types of things. And so I think that there's a real role to play as a government and as a regulator in terms of how do you lead that charge of identifying, you know, how the banking system is supposed to work for the country, for the economy, for society, and the
for
way
bank
it's
shareholders.
And absolutely. But, you know, I always look at it and people say, oh, gee, you know, you're here for the shareholders, you're here for your customers, you're here for the economy. if you don't take a long-term approach of making sure that you're there for your customers and you're there for the economy and you're there for society, your shareholders are going to suffer.
Absolutely.
I mean, there's no question about it. So I don't look at these as either or. I look at it as, no, this is inclusive in terms of coming up with the best solutions on these things, and making sure your bank is safe and sound is going to mean that the returns to your shareholders are going to be more resilient in the long term.
Yeah, it's the basis of competition. It
Mhm.
allows you to thrive versus get increasingly in a vulnerable position.
Exactly. But that's also where the regulator can say, yes, I want you to compete. I want you to compete amongst yourselves. I want you to compete with the fintech companies. But what I'm going to do is I'm going to provide a forum for which we can have this dialogue.
Yep.
And I'm going to provide the boundaries within which I expect you all to compete. And I'll even help you come together so that, on some of these issues that impact the entire industry, we can have a dialogue about what is the best type of regulation? How does that work? Let's get the incumbents, let's get the startups, let's get the technology companies in here to talk about how to design this going forward, because presumably everybody's got the same ultimate goal, which is to have a more efficient system.
Well, I hope we get there in Canada. Right now, we're in a situation where the banks are very thrilled that I think that the fintechs have not been part of the government's COVID response. They certainly haven't enabled it. And I hope we get past this reluctance where we're at. You've given all the reasons as to why that's so important. And Jim Cowles, I just want to say thank you genuinely for taking the time to chat with me and giving me some of these insights that I'm intending to share with others, and grateful for your help on this question.
It's been a pleasure, and good luck.
Yeah, I need it. We need it in Canada. Anyway, good luck with RTGS Global. It's a fantastic initiative that I know many large Canadian exporters are going to be glad to see their banks utilizing.
I hope so. Thanks very much.
Take care.
Take care.